Good afternoon, everybody. Happy day after Thanksgiving. I hope everybody had a restful, enjoyable family time. Thanksgiving is a time for family and friends, and giving thanks for all that we have. VIX Trader here. I'd like to cover uh, action for Wednesday and what might happen today, just to see what the market trends doing. Just want to say, there's a lot of news out there about seasonality. You'll hear stuff like the market's always up 75% of the time in November, 83% of the time in December, the spiders. And these all statistics are nice, but however, in a bear market and like such as like 2008, those things don't really matter. What you have to look at is the driving force, the news is driving the markets. In 2007, 2008, it was Federal Reserve policy and banking issues such as Bear Stearns and Lehman Brothers and Merrill Lynch was brokerage houses, which were stock owner held companies. They were in trouble, and whether the government would bail them out or not, along with a myriad of other mortgage companies. The driving news doesn't matter what the seasonality is Federal Reserve interest rate policy, whether they're going to hold rates or raise them and continue raising them, and how many times in 2019? Zero, two times, three times. Some people say four times. We don't know. And the tariffs in January 1st, 2018, 2019, excuse me. I mean, they're scheduled to be a 25% tariff on all imports from China. And those are all very bearish sentiments for the market. So as you look at the market, we talked about the January indicator, which is this line, and the market goes below this first bar, which is the month of January every year, it could get kind of messy. And right now it's below. It's 267.40. And the market right now is at 265.01. The spiders is, and so that's very bearish, And as we've seen other times where it's gone below it, it has been very good, such as here, or in 2008, when in September when Lehman failed, or in 2015 here, and it's just going sideways. And the longer it hangs below this 267.40 area, the more bearish it is. And we'll see that. We talked about the very first bar in each chart, such as the monthly chart or the 15-minute chart. They're very important. And then we see how on Wednesday's action, here's the first bar, the first 15-minute bar from 9:30 to 9:45, and how the market went above it, it stayed above it, and it had a hard time staying above this declining the three-day moving average, and was going down with the three-day moving average. It didn't continue to rally up to the five-day moving average. And that's a very bearish situation. Tells you if you're going to trade bravely, or don't trade at all, stay in cash, or just it's a bearish sentiment. And we see at the end of the day, the last hour, 3 o'clock right here, it went above the top bar and held support at the bottom bar and went slightly below it, because this is 265.08, and it went below it. And so, I mean, that's how the day in the bearish market, the markets tend to sell off at the last hour, versus in bullish markets that tend to rally at the last hour, and we'll see situations such as the VIX. I mean, the VIX is climbing upwards, and right now it's at the support of 20, and then goes high as 25. And then when the VIX spikes, it usually means the market's going to go down. So the VIX is looking to spike, upward in this channel, and the market is really still in a downtrend. It broke it, but it might resume. It looks like the futures are down $1. It's going to resume downward, and we can search some clues in other indexes, such as the IWM. The IWM was the strongest index of the day. It rallied above the 3-day, stayed above it, kept rallying towards the 5-day. And as soon as it hit the 5-day, it started going down, and it found support at the 3-day. So it was the strongest of all the markets. The QQQs actually did similar. It broke the downtrend. It actually stayed within the downtrend, excuse me, and which is bearish, as opposed to the IWM and the SPY broke out. It rallied, but just went sideways. It stayed above the 3-day, but it failed to rally towards this red bar, this red line, which is the 5-day moving average. So we essentially have this bearish situation when you hear the news, the market's up, but yes, but which direction is it going? As we see, it's going sideways. which means no one's making money. And if they're gonna pay, they're gonna pay a premium because this top bar is like a premium, and it went down. You know, so that's what it's looking like. Reading this number here, the 267.40 in the spiders, is the most important number, that January low. The longer it stays below it, the more bearish it is. And it looks like we could end the month on a negative note. The market is up, I think, 1/3% for the year, and it's down for the month of November. And this is the number for the 3-day moving average and the 5-day moving average, and it has to overcome these things. So that 267, 268 area, and if the market goes below the weekly low, which they set on Monday, at the 263, I'm sorry, it's set on Tuesday, 263, that's very bad, but we'll see. It has to go forward to go lower. First, it has to break yesterday's low, the 265.01. In the pre-market, it's already down $1, so that's 264. The next support read is 263 weekly low area. And if it breaks below that, it's probably going to go a lot lower to really around, the previous lows, which on a weekly time frame is about, I'm sorry, I really use a daily chart. We'd be around here, these lows right here, which is around 259 to, it's probably headed to the 259 area, to be honest with you. And that's how it looks. But I hope everybody just stays in cash, or if you trade in a very short time period, you have to know your time horizon. And if you're going to trade in the short term, you need to have an edge, and your edge is really to see what the trend is. And to me, whether the trend is going down, I always look at the first 50-minute bar. Is it above it, like here, rallying, or is it like below it, like right here, and just going further and further? I mean, you can't pick bottom. You can try, but you're usually bottom pickers and top pickers. Shorters who try to pick the tops to get burned, and bottom people who like to buy things think there's a bottom, and I don't know what random prices they choose, can often get burned. Happy holiday weekend. I'll see you guys Monday. Thank you for tuning in to VIX Trader. Bye bye.